extended periods of unemployment. What term life insurance can do all that? Western Reserve Alliance Advantage Term with living benefits. No other term insurance product bundles so many solutions to life's unexpected problems. And all in one policy. So for more information, call Brokers Alliance 1-800-290-7226. Stop selling the old terms. Start selling the new.
Well, welcome back to the Business Insurance Zone, the talk show that focuses on insurance in your practice. I'm Steve Savant, your host, financial color commentator, and interviewer extraordinaire. In this segment, we're continuing with our discussion with the diva of disability, Marcy Pruitt from Brokers Alliance, ahead of our department on DI, and all that is DI is your domain. So we bow and salute your knowledge, and we're into corporate, and we talked in the first segment, excellent segment, I have to say, but I really want to kind of now start to drill down on a few other aspects: buy, sell, key person, and retirement, and how that all kind of integrates. Let's do first key person.
Okay. Well, key person, as it indicates, is a person that is so key to the organization and generates revenue that if they were to become disabled, it would create a problem for the employer.
I think that we should use myself as an example of that key person, whereas if I was not here, the company would suffer.
Right, and that's the product's been shelved by many carriers because we're all replaceable, Steve.
You know, I know that in the general population that is
yes,
true, but
absolutely.
I think I might know.
In your case, yes, the key person, similar to life insurance, and you know, if then the person didn't die, but they became disabled, and it would create a revenue issue for the employer.
I always thought that was I would get the disability income, but how does that help my employer?
Well, in the personal DI, you would, and that's why it's important to use the proper product, because if in a key person, the employer receives the monthly benefit. So if you are a key individual in the firm and you were to become disabled, the firm would then receive the monthly benefit to do with they please, to either hire, recruit, train someone to replace you.
And what percentage will they pick up of that person's base salary and comp?
It varies, but essentially it can be it's 80% of the income that was being paid to you, or you really now can almost design it for just a flat amount if they wanted to. And again, because it depends if you use the traditional market or if we go to Lloyd's. Lloyd's, you can design them the same thing you want. You can just say, I want $500,000, and
I love Lloyd's. They'll do anything.
Yeah, it is kind of a factor of your income, and it depends if it's lump or if it's paid monthly. So there's a lot of variation, but the benefit can be paid out monthly to the employer, and then it's usually about 2 times your income, your monthly income. And then if you want a flat lump sum, that's where the 80%, and there's some other things that come into play.
So there's a huge distinction. I'm on a learning curve right now. The personal DI, the employee's receiving, but this key person DI by the corp is really paying the employer.
Correct.
Now is that? And I'm assuming that the DI is that deductible on the key person then, from the corporation point of view.
No, because the corp's the beneficiary.
So the corp can't write it off.
Well, they can write it off, but then it could create a taxable benefit to them.
Back to the corp.
Right. So you want it's usually not a deduction because the corp is the beneficiary of it.
Well, just remember, everyone, check out with your CPA or attorney to find out how they read on this, and of course, if you're the broker dealer, check with your compliance officer. Well, I want to talk a little bit about then, and that, I really like that because that was a distinction I didn't think I had my head around, and that's a great distinction. I want to talk a little bit about this retirement because this is the one that I got to say I did not know. Here I think I am the bastion of all font of insurance knowledge, and here I am not knowing this. Retirement and DI. How does that work? It sounds exciting.
Well, it's when you are healthy and working and putting money away in a qualified contribution plan, or for simplicity, I mean, any type of plan, exceptionally a defined benefit plan can be covered, but typically some kind of qualified contribution plan set by our KEO 403B, 401k. But take your common 401k. When you're healthy and working, you're putting the money away, your employer's doing a percentage of a match, and you become disabled, well, that stops. You're not working, you're not collecting a paycheck, your employer's not matching that. And so hopefully you have an individual policy. That's not a requirement, but in any event, you're no longer putting money away for your nest egg. So a trust is set up where the predetermined amount of monthly benefit that you purchase, because it's an indemnity. So if you purchased $1,000 a month, or we basically take the IRS limits and divide that by 12, and you put that money is then put into a trust each month. You pick any investment direction you'd like, and the trust will spin off the 1099 each year to pay the tax on the capital gain. So that money gets invested month in, month out, and at 65 you draw that out as a tax-free disability benefit. It's not qualified money.
Because you paid your tax up front.
Right,
Now,
each year.
So this could, then in reverse, then conversely, could I use this for my 401k and other qualified plans?
Well, it's not qualified money. It's a disability benefit being paid into a trust each month.
Oh, I see. So the income is coming. They're not really linking the two.
They're not linked at all.
Gotcha,
So
okay.
your 401k plan through your employer is frozen, and you can let that sit there, or you can, depending on your situation, you can divest that under hardship rules, and so you may blow up or spend your nest egg. So that's why the importance of continuing.
This sounds like a
trend.
great key person. If I'm looking for perks for my employer, and hopefully he's listening to the show, this would be a great perk, because I could, if I couldn't fund my retirement because I was disabled, I'd be getting my individual DI to pay for my normal domestic spending and all those issues. Then I'd have this. I'm still putting money away.
Exactly, and the beauty of that is it can be a lifetime stream of income, because your personal policy is going to run out at age 65 or 67, like we discussed. So what happens?
Or longer if your employer allows you to stay past 67.
Well, yes, if you're still working full time, then it usually goes to a 1, 2, 3 year benefit period. But that's different. That's pre-disability. The policy benefit period still stops at age 67. A couple have at age 70, and 2 still sell a reduced lifetime. But for the most part, most policies benefit terminates at age 67. When that happens, you're done. Is Social Security going to be there? Do you have a nest egg? Most likely not. So that's where this then kicks in, this pool of money that you've established in the trust.
I did not know that, and I think a lot of our viewers didn't realize it either. If you want to have, Marcy's got stuff on all this. If you want to write her, Marcy@brokersalliance.com, or call her toll free, 1-800-290-7226. Her extension is 126. And ask her about this. I think this is one of those things I could get into a corp, and actually this is a thing I could sell.
Well, and if especially, again, we talked about the markets. If you're selling group LTD, if you're selling 401k plans, this is a great cross-selling, because are you selling the old kind or the new kind? Well, the old kind's when you're healthy and working, you're putting money away. The new kind is when you're healthy and working, or sick or hurt, the money continues to be put away.
I like that, because we in our commercial, you probably heard our commercial, it says stop selling the old terms, start selling the new.
Right.
Now you're saying
stop selling the old 401k way
and start selling the new.
And the same rules apply if you have X amount of employees, typically 10 for this type of product, we can guarantee issue it. So the employer makes it available on a voluntary basis or corporate pay, and it can be guarantee issue.
Who are the players in this area?
Principal, Mass Mutual.
Mass Mutual, wow, okay. Big Blue. Anybody else that you kind of like?
A couple are coming out with it, but it's
We'll
not
see.
really.
We'll have to
yeah,
wait.
Guardian
Does,
yeah.
Oh, yeah.
Guardian,
The venerable Guardian.
Principal, Guardian, Mass are the 3 that have had it and are.
And you guys are selling.
Have been selling, right?
Excellent.
And some others are trying to.
What about buy-sell? This buy-sell DI, I mean, I always think of life insurance buy-sell arrangements, stock redemption, cross-purchase,
Right.
wait-and-see trust. People have to die to make all this happen.
Right.
But what happens when one of my partners or one of our employers or shareholders, they become disabled?
Well,
Talk about DI buyout. 'Cause
Right.
That's or actually buy-sell, yeah.
And it's really creates more havoc, because under the same premise as life buy sell, you don't want to be in partnership with your ex-partner spouse. Okay, well, you don't want them, the disabled person, to sell to a competitor, to be a drain on the company. While you're healthy and working, everybody's on the same page. When somebody's disabled, they want to pull everything out of the business. So by having this set the terms set forth prior to the disability, when everyone's healthy and happy and working together and growing the business, then the terms are set forth. So if they become disabled, they don't die, but you still want that disabled person out of the business. And
you say that so coldly.
well, that's the reality.
Okay.
And again, because their concept and outlook on the whole business changes. They are not interested necessarily in growing it and putting money into it. They want money out of it. So, and the creditors may not look favorably on that. I mean, a lot of things come into play. But a great start to try to sell this is to go back and look at every one of your life buy-sell agreements and see if there's wording in that agreement about a disability that you've not funded.
Marcy, I have to say, of all my time, almost 30 years in this business, most of the buy-sells that we review for life insurance, whether it's buy-sell, cross-purchase, stock redemption, or wait-and-see trust, almost all of the succession planning, almost all have very little documents, if at all. I'm kind of taken back how we've written the applications, but we didn't do the legal work to match up with the actual insurance that we bought. This is a huge issue. I mean, even if I can find a doc, hopefully you're telling me now if they do have one, your next step of reviewing is make sure the attorney reviews if there's any disability provisions.
Right, and the disability carriers typically give you a year. We don't want to hold the sale up, so you can sell the policies, put them in force, and you have a year to go back and draw up the agreement, because the wording in the buy-sell contract must match the disability carrier's contract. The carrier's not going to do what your agreement says. The agreement has to do what the contract says.
So I'm putting it in force first.
Yeah, put
putting
the policy in force
first. And I have up to 1 year to get my document to match the carrier. And I'm assuming the carrier then looks at it, signs off on it.
They don't even need to. They just need to enforce, because they'll rescind the policies if there's not a document in force after a year.
Okay, so they got a year to pull that off, but it's after the fact.
It is after the fact, but again, they just want to make sure that they're going to be able to fund a viable document.
Well, I'm taken back by that. That's pretty. I love that idea, though. I mean, so on my buy sell, and would this work? Probably it'll work with cross purchase as well too.
Absolutely.
My mechanics probably think
cross sell, entity trust, any type of.
Well, I like all that ability to do that, because I always want to make sure I can go ahead and cover off. That's a strange area of business indemnification. I love that. I learned another thing today. I want to thank you for being my guest on my show today, Marcy. That was great.
Thank you.
You can write Marcy, of course, Marcy@BrokersAlliance.com. You can call her toll free. I like to. 1-800-290-7226. Her extension's 126. And don't forget to visit us on our website at www.BrokersAlliance.com. I'm Steve Savant. You've been listening to the Business Insurance Network. Yeah, that's the buzz on the biz. Get into the zone, the insurance zone.
This has been a Bravo video event of the National Insurance Clearinghouse and Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. You can contact Brokers Alliance at BrokersAlliance.com or 1-800-290-7226, extension 147.